Well, great. Well, thank you, everyone, for taking time to join this webinar. What I was just planning to do for the next quarter of an hour or so is really kind of just take you through just some of the signs that we see at NetSuite when businesses have reached the limits of QuickBooks. I talked about probably about 2 or 3 CFOs or controllers every week, and we see a lot of the same themes come up. QuickBooks is a great product. But sometimes when you've got a certain number of employees or different business processes or the business have grown in volume, it's time to move. And so there's 2 things I'm taking you today. The first one is just some of the common themes that we see that come up again and again. And the second thing is when we speak to finance executives, the kinds of things they're looking for when they make the move, and also after making the move, what's given them the best bang for the buck moving from QuickBooks as well. So, how to think about your next financial system and the kinds of things you might want to consider. So, because you don't want to end up. Moving systems is sometimes not fun, and you want to make sure that you make the right move, and you have to make another move again, 2 years later, right? So, how to make a strategic decision around moving to QuickBooks. So that's kind of what I'm going to cover today. And also some best practices at the end as well. So, so just a very representative quote here. So, it's actually from Gorka Media, very well-known media publishing company. They have multiple subsidiaries. They're running on QuickBooks and also a lot of spreadsheets as well. And this is very common what we see when we speak to businesses. QuickBooks is a nice accounting solution for the right for certain size of business. But what you very often see is as the business grows, you end up with data in multiple locations, in spreadsheets, reports from QuickBooks, the emails, some of the accounting is taking place on spreadsheets, and it's very, very hard to integrate that information together. So, one common thing you'll see, obviously, is from a reporting standpoint, just building management reports gets very, very difficult, and also there's often a lot of manual entry as well, trying to keep this information in sync. So this is very, very common what we see across many businesses we speak to. Well, why is that? Well, if you look at a kind of typical applications journey, it obviously varies from company to company, but, we often see this kind of like this typical journey, right? You start out with QuickBooks, you maybe add some spreadsheets, you start forming your management reporting on spreadsheets, with Excel, you add Act or Goldmine for SFA, maybe upgrade that to Salesforce.com or maybe Microsoft Dynamics CRM. A lot of businesses obviously selling over the web now, building an e-commerce channel. You might put a homegrown website to start off with, or maybe move it up to something like Demandware or Volusion on the website side of things. And then maybe as the business grows to a certain size, maybe once you've got 30 or 40 employees, maybe then you upgrade QuickBooks to QuickBooks Enterprise, right, to get some more seats. And so what we see is that when you've got that kind of gradual evolution of systems, what often happens is that because of a lot of integration points, a lot of money trying to maintain these systems and keep them in sync, and you end up with devoting resources just to trying to keep all these systems talking to each other. So, at NetSuite, we kind of call this an applications hairball, and it's, I would say, something that when we speak to businesses, probably about 80 or 90%, if not higher, businesses have out there. And I tell you what, it's not just businesses that run QuickBooks that have a hairball. It's businesses that have running everything from Sage to Great Plains, all those other systems too. So, and you look at it, and really what it is about, it's you've got multiple systems, across financials, maybe you've got separate for SFA, maybe your back office system around inventory, often things like spreadsheets, for example, for accounting processes. You can't necessarily fit in.
Welcome to GoToWebinar, web events made easy.
Often see is typical business processes, such as the order to cash process. So when the opportunity gets entered in the SFA, it flows through to the quote, flows through to the order, and then flows into QuickBooks for fulfillment and invoicing. Often the point where QuickBooks meets the SFA, often there's FTEs devoted to re-entering or double-checking the sales orders as they flow into QuickBooks. And it's the same thing with the procurement aspects as well. If you're going through you have a pretty kind of a high volume purchase order process, for example. Often what you typically see is the actual purchase order aspect can very, very quickly become spreadsheet based, and then it gets entered and has to get re-entered then into into QuickBooks. And so this often places a lot of pressure on growing businesses. They're adding often staff to support the tactical processes of just simply the information flow, and it means less staff to devote to more value-added tasks such as forecasting, budgeting and planning, and those kind of areas as well. So more tactical stuff and not enough on the strategic side of things. So when we actually asked, we surveyed the IMA, the Institute of Management Accountants, about 6 months ago, back in November, and we asked them actually, it was about 500 respondents, many of the businesses running QuickBooks. What are the opportunities you see, to improve your business systems? And the standout area is business intelligence, just getting much stronger, management reporting and analytics. Multiple systems is hard to get a consolidated view of business performance. It's also hard to get a real-time view as well when it takes a long time to pull the reports out of QuickBooks or to pull them out of your SFA system. It's very hard to get, for example, an integrated bookings, billings, backlogs report, for example, when you've got to pull from multiple systems, often out of date, and often a lot of people have to, you have to have a full-time person to pull that information together. The second area was ease of use, and we drilled into a little bit further with them, and it was really around getting access to the system. When you're running QuickBooks, sometimes.
Welcome to GoToWebinar, Web Events Made Easy.
For a small number of users, and it just makes it hard to get access to and hard to use. Another area was just simply further integration with deep back office processes. So when we speak to wholesale distributors or manufacturers, where they have multiple sites around inventory management or multiple warehouses or manufacturing facilities, often it gets very, very hard to integrate QuickBooks with those multiple inventory systems as well. And it becomes very, very hard to keep all your inventory in sync and marry that to your financials. And then there's some other areas that came up, remote access, just getting access to the systems on the road, order management processes, and procurement processes. So just some kind of just some examples of some of the areas that finance organizations saw room to improve. Now, so in a nutshell, we kind of talked about these, just kind of summarize up. So these are probably the top 6 reasons we see. Improve management reporting. Spend less time on spreadsheet-based accounting. So whether it's maybe some invoices that are on spreadsheets, or maybe some of your revenue recognition or budgeting and planning, those areas are taking place on spreadsheets. Trying to move more of it into a systems-based approach rather than a spreadsheet-based approach. We see order volume as a big reason that businesses move. Just simply the order volume has become too great, and it's just slow to log in to QuickBooks and slow to get reports out. By employee access to the financials, this comes in a number of different areas. Often what we see is finance teams that sometimes are a little bit more distributed. Maybe an AR clerk that works from home, for example, they just wants to log into the system, and it can become hard when you're running QuickBooks to make that happen. But we also see employee access to the financials when you think about time and expense management as well, where just employees want to log their time and expense, and it's just hard to to basically it ends up they have to build a spreadsheet, punt it over to the finance team, and they have to plug it into the financials. So it's not it's not designed for more the extended business. Multiple versions of the data, hard to reconcile. So you have multiple versions of the customer, for example, maybe one customer view in the sales system, another customer view in your in QuickBooks, and maybe another customer view in your support system. And all of those customer versions have different information attached to them, maybe different address, different contact information. And so when you get into things like shipping and invoicing, maybe the salesperson has one version of the customer, and it gets very, very easy then to end up with invoicing errors or issues around renewing the customer if you have a different version of the customer information in your support system. So it's hard to, you end up spending a lot of time reconciling versions of data such as customer. And then other areas like integration to front and back office processes, where what we see is as businesses grow, they're spending more time on order management, or more time on procurement, or more time on keeping their website and their QuickBooks application in sync, and less time on running the business. So those are kind of the top 6 reasons we kind of see out there. So just kind of briefly run through kind of thinking beyond financials. So when we speak to businesses that have made the move, and we've asked them, what are the areas that you thought about and also gave you the best bang for the buck. I've kind of rolled them all up into some different tables here. So the first area is really to think beyond the core financials. It's not just about replacing one financial system for another financial system. What we're seeing is that increasingly financial systems are increasingly woven with the rest of the business. So you need to start thinking about integrating your CRM system with your financials, the opportunity to cash process. And it's actually you need to think about at a fairly deep level as well. So everything from the order management, the approval, so when the salesperson enters the sales order, and making sure that finance has the review process to then review it and approve it and then push it back to the sales system, and even things like quote management integration as well, making sure those quotes are up to date in the sales system as well, and they're pulling from the from your financial system. So really tight, you really want to look for tight integration between sales and financials to get the maximum benefit and make your sales guys productive and spend less time on rekeying those orders. Second area about procure to pay integration. So one of the key areas that we see again and again is that by making the procurement process self-service, by pushing that to employees to be able to enter purchase orders and then push that to managers to approve them, and then also manage all the vendor bill and vendor reconciliation of vendor bills in the back end, you can end up with a much more self-service process, and it takes the pressure off of the finance organization to kind of re-enter POs, as well as it strengthens that. You have a much more auditable approval process as well. So time and expense, we've touched on that. Not much fun getting millions of spreadsheets sent to you from various employees. You have an opportunity when you move from QuickBooks to move to a web-based model for time and expense. And then on the time and expense aspect as well, you want to think about services as well, right? And make sure that when those employees enter their time and expense, self-service, that the product has the intelligence then to bill back to customers if required. As mentioned earlier, more and more businesses we see are seeing the web as a fundamental distribution channel, whether B2B or B2C. What we see out there is that it becomes very important to think about integrating your e-commerce system with your financials. Why is that important? Well, your pricing information. When you change your pricing in your financials, you want to make sure that reflects out to your website. So you want to make sure that if you change your inventory, you want to make sure that syncs up to the website too. So you need to start thinking strategically about how to make sure that's very tightly integrated with your financials. Services, we talked about a little bit earlier. So you don't want to end up with a scenario when you move, and if you have a services part of your business, that it's hard. You end up having to figure out which bills to bill back and which bills you have to pay out yourself. So you want to make sure that the solution has some services intelligence in it, so you don't end up having to manage that stuff yourself. And the final area is one view of the customer, making sure your sales, support, and finance team are on the same view of the data. And that really helps out with everything from renewals. It helps out with invoicing accuracy. It helps out with everything from reporting as well, customer profitability reporting, making sure everyone has the same view of the customer. And it also helps out from a customer stat standpoint as well, where the customer isn't being contacted, different contacts across different touch points in your business. So we talked about considering cross-functional processes. So once again, you need to think cross-functional, that whole process. So think everything from the marketing lead even, so through the opportunity, the quote, all the way through to the back office processes. Same for procurement and same for things like your bid to bill processes. You need to think cross-functionally. The second area is really about making sure it will grow with your business. One thing you don't want to do is when you move from QuickBooks, a couple of years later, you end up with multiple instances of your ERP system where, if you've launched a new subsidiary or you've made an acquisition, you then have to front up another ERP system, in your EMEA sub or in your APAC region. So what you really want to make sure is that, you're going to end up with a consolidation mess at that point, right? Having to manage spreadsheet-based financial consolidation, or you're going to have to end up purchasing maybe a new financial consolidation package to manage that. So you need to make sure that your ERP is going to be able to support multiple subs and multiple charts of accounts. Okay, so you can keep all of your subs within the same application as the business grows. You also want to make sure that things like tax and accounting are built into the application, local sales tax. Because what we often see is that one of the reasons businesses start to provision new ERP instances is because the one they chose didn't support tax or accounting regulations within a local sub they were rolling out as well. So you need to think about your growth path as you move forward and make sure your ERP system is designed for that international growth path. Sales tax management, as well as drilling down from corporate to subsidiaries. So when you've got your if all your systems, your subs are in the same system, you want to make sure that you can drill down from corporate to sub. Really helps out from a management reporting standpoint, helps out from a business management standpoint too. And then finally, easy to integrate. So so just you need to make sure that your system after QuickBooks is really flexible as well. So once again, we're increasingly seeing businesses very tightly integrate with their suppliers, as well as channels they sell over. Many businesses selling on Amazon or selling on eBay, or they have a very tight supplier integration. You need to make sure that the solution is really web service enabled, so you can integrate with systems beyond your business. Your analytics, increasingly analytics is part and parcel of ERP systems. You want to make sure it's a self-service experience. You don't require an IT person to have to create those reports. You can create those reports and dashboards yourself, not having to wait a few weeks for an IT guy to work to build that stuff for you. Workflows and approvals, we'll see a lot of businesses start to automate that. So rather than having manual processes to approve, more business processes and more prepackaged workflows, everything from time and expense approvals, self-discounting approvals. So you want to make sure the system has a workflow manager to support that and create workflows based on the needs of the business. So options. So lots of things to think about, and lots of approaches. The way we kind of look at it is, well, you've got two different ways to look at it, right? You can either go for a single accounting solution, or you can take a suite approach for that more of a cross-functional approach, and you can go on-premise or cloud. I mean, those are really some of the kind of the broad brushes you have to work with. If you look at going for on-premise accounting, well, there's always an IT impact. You've got to maintain those systems yourself, and because it's just purely accounting, you're still going to end up with that fragmented view of the customer. And the fragmented process is, well, it depends on how much investment you're going to spend on integrating that accounting package with the other systems. And what we see out there, that often is not insubstantial, that amount of effort, and it's very hard when you have a siloed accounting system to have a integration with sales and support and your web without a lot of work. But you also go for a suite approach out there for on-premise. I mean, so there are on-premise suites out there. Products from SAP or some of the higher-end Dynamics products. But what you see is when you're deploying a suite across all the aspects of the business and you're doing it on-premise, that's a substantial IT investment. A lot of servers, a lot of work to actually deploy that in place, and typically very, very expensive to front out for a completely integrated suite across the entire business and manage that. The benefit, though, is done right. You do get integrated business processes and integrated customer. The downside, as with any on-premise solution, you do have ongoing maintenance to think about. Accounting and cloud, so there are cloud applications that are focused on purely on accounting. So, big benefit of the cloud is, low IT resources, in some cases no IT resources, to worry about managing the solution. Typically, you just have an administrator that might be just, managing the accounts and provisioning users. Low capex up front. If it's cloud, it's pay as you go. But you're still going to end up with those fragmented customer and processes to maintain. So it's hard to get that order to cash flow, or that procure to pay flow, or that web to fulfill flow when you've got a siloed accounting package. And the final area is really suite. So I mean, if you go for a cloud suite, you get the benefits of the cloud, but done right, you also can get benefits of those integrated business processes, the integrated customer. And what we see a lot of businesses out there doing is they may say, hey, we want to get to a suite, maybe we can deploy it now, or we want to grow into a suite over time and grow in a more of a kind of integrated way. So cloud suites really do help simplify business processes and IT. You look at the on-premise way, you got one set of systems for financials, another set of systems to manage for CRM, e-commerce. Moving to a suite, kind of cloud suite view, it's a single. You're looking at a single application which you subscribe to. So integrated business processes as well as less systems to manage. All right, another big profound thing that we see out there is this. Little known fact is, the factoid for the day. New York Times. More human beings have access to a cell phone today than the United Nations have access to a clean toilet. Pretty crazy number, but the little factoid is a lot of people accessing systems through their cell phones today, and we see there's a pretty profound shift in terms of the way workers are accessing systems. And you need to think about this and what your employees are going to look like in the next couple of years in terms of how they're accessing their financials. So what we're seeing is that, with increasingly distributed workforces, outsourcing, contingent workers, people want to access their systems, submit time through their iPhone, even access latest reports through their iPad or through a netbook or from home. Self-service means accessing systems through a web browser, time and expense through a web browser, and then analytics. Increasingly, the next phase of what we're seeing around analytics is to be able to access these systems from anywhere, get the reports no matter where you are, and getting a real-time view of the business. Cloud really does help out with that. It makes these systems much easier to access from these devices anywhere you go. So it's really designed for the anytime, anywhere, any device employees. Increasingly, we're seeing that as a big factor for businesses and something you need to think about as you move from QuickBooks. Let me just blast through this. I'm running a little bit late. So in a nutshell, what we see, cloud suites, lots of things to think about. Obviously, on the options chart, what's best for your business. What we see out there is that really cloud suites, number of different benefits. Helps you scale that distributed finance organization, web-based application. You get the benefits of administration from the cloud vendor. So things like the SES70 Type 2 controls are included as part of the application. Cloud suites, as we talked about, help to automate those end-to-end business processes, can make your employees more productive that way. Staying abreast of the latest accounting changes, things such as latest Rev Rec standards, EITF 0801 and 0903 and those kind of things. Often with cloud applications, those kind of new regs are supported as the application is delivered and rolled out to you automatically, rather than you have to upgrade the application yourself. So just finally, before I hand over to John, just general tips for success. What we see come up again and again is, number one, assign a cross-functional team. So think, assign a team from your finance team, your sales team, your support team, your web team, to think about this as a strategic move and make sure that you've got different inputs from across your business. Business benefit goals, so make sure you have strong goals around it. Don't necessarily re-implement all your past processes in the new system as well. So take the opportunity to re-engineer the processes and improve them rather than carrying forward your old legacy processes. And also really plan for getting better analytics and better visibility. That's a big reason to make the move. Look for real-time analytics. And then finally, plan for a distributed organization, an organization that's really accessing the system through the web, through mobile devices, kind of going forward. So with that, I'm going to hand it back to John.
Thank you so much, Paul. Great job. And at this point, we're going to take a brief break in between the first presentation and the second presentation. We're going to go ahead and launch this polling question. This is the first of our two CPE-based polling questions, and also we'll learn a little bit about what's going on out there when you answer it. So we're going to take just a minute for this. I do want to remind folks we've got a couple questions in the queue, but if you have questions at any time, feel free to ask it via the question section of your GoToWebinar control panel. If you take a look at the control panel there, it's a little area marked question. Just fill it in, and we'll do our best to get to it after this next speaker when we get to our brief panel discussion. So I'm going to go ahead and shut this down in about 10 seconds if you want to get your vote in quickly. And by the way, if you're not here for CPE credit but still want to weigh in, please do. We'd love to hear from you. Okay, and with that, I'm going to go ahead and close down the poll. And we're going to move on to the next part of today's presentation, leading through business visibility. And we have the great pleasure of having Howie Friedman, who's a CPA and the Chief Financial Officer of DC Dental Supplies, a distributor of dental products in the U.S. DC Dental was the 2011 recipient of the Inc. 500 5000 Award and recently opened up offices in New York and Ohio. Howie has been with DC Dental since 2007 and is responsible for managing the financial risks of the corporation, as well as financial planning, record keeping, and reporting, as well as overseeing annual revenue growth from $10 million in 2007 to $25 million in 2011. and that's quite a feat given the way our economy has gone recently. In addition, Howie was the project manager responsible for the company's transition to NetSuite's Cloud Business Management Suite. Prior to joining DC Dental, Howie was with the IRS as a revenue agent. We're glad you're not doing that anymore, Howie. He received his bachelor's in science from the University of Maryland and was recently named a CXO Award winner in Smart CEO magazine, which appears in the March 2011 edition. Howie, thanks so much for joining us today, and we're happy to have you. Please take it away.
It's a pleasure. I just want to comment, by the way, I have 3 kids, so I don't have access to a clean toilet either, but I do have a smartphone.
Thank you for that.
I did work at the IRS, and I actually got to sit on the other side of an audit now in my experience here at DC Dental, where I've been since 2007. When I joined the company, we were on QuickBooks, and and on a bunch of other different computing platforms that were premise-based, and we've migrated a lot of our platforms, including our ERP, from a premise-based solution like QuickBooks to something that was fully in the cloud. While I was at DC Dental, I've seen a revenue increase of 400%. That is accurate. I have had experience with QuickBooks, NetSuite, and Mass 90, Mass 500. I've dabbled a little bit in some of the other software platforms out there, so I have seen what's out there in the past. So our company, what we do, and if that relates to anybody who's listening, what we do is we sell dental supplies, equipment, and services for dental practices. So part of our business is wholesale distribution. Part of our business is delivering services to people at an hourly rate, and we also sell large capital equipment to dental practices. Our company was founded in 2002. We currently have offices in New York, Ohio, Maryland, and hopefully more in the future. The employee number, as this slide was made a few weeks ago, is 95. I think we're at 100 and something, and are projecting revenue of $40 million this year. And like I said, we started from 10 million when I joined, so we're growing rapidly. We started the company in 2002. I think it was the QuickBooks Premier Pro, whatever. I don't even know if there was an Enterprise Edition. And it was always a race against the clock to see who would grow faster, QuickBooks or us. They introduced QuickBooks Enterprise, and it originally was introduced with a 5-user limitation, and then a 10-user, and then I think they may have had a 20-user for a period. And I believe now they're up to the 30-user limitation, which is where we were as of December of 2010. So it wasn't too long ago when we were on QuickBooks and running our company on, well, it was more than one QuickBooks file, and it was roughly, we were approaching the 30-user limitation, and a bunch of other limitations. They recommend not having your file size exceed 1 gigabyte for enterprise users, and we were at over 4 gigabytes. And we had multiple databases, spreadsheets, workarounds, websites. I mean, we were very disjointed. Every time we changed the description on a product, the price on a product, we added an employee. And anything else that goes on in a small business, it was a process of updating several different places and making sure that all your data was matched from one location to the next, and that it was synced properly. In addition, one of the other limitations that we found with QuickBooks was that the reporting in QuickBooks on a very basic level is very strong, but if you needed a customized report that would display data in a certain way or put 2 different sets of data together, what we wound up doing a lot was exporting it into Excel and then using all sorts of formulas and functions, VLOOKUPs, etc. We were able to get the final product that we needed, and then we were able to distribute that report to whoever needed, whether it was external or internal, banks or employees or whoever needed that data. It was a process to get it there, and in order to get it there, you needed a high-level employee to do it. So we're using not only a lot of hours, but it was a lot of valuable hours that were probably better used growing the business rather than working around in spreadsheets. And with QuickBooks being that it's geared towards a small business, there are certain limitations in terms of your ability to customize it and make it work for you, as opposed to you trying to make your business work in line with what your software is able to do. So when we evaluated the different options, and there's different brands out there that we looked at, NetSuite, Great Plains, but really the evaluation process was more limited. To me, it was a question of whether or not we were going to be forced to go with a premise-based solution and non-browser-based solution, really. I mean, that was the key for me. It could be hosted anywhere. As far as I was concerned, it was convenient that someone else was willing to host it. But the key to managing your data in a small business is, and until you experience it, you won't know what I'm talking about, but the idea is to have it in the cloud, to be able to log into any browser, and especially if you're working with software that's browser neutral, where you can use it whether you prefer Chrome, Firefox, Internet Explorer, or Safari, or whatever else is out there. Any employee, for whatever role they play and however they fit into your organization, they can log in anywhere with the username and password, assuming you give them that access. And username you can restrict there are certain restrictions you can set in place, but assuming you leave it wide open just with a username and password from anywhere in the world, they're immediately logged into your system at the same speed and the same relevancy as what you see in wherever your main office is. So most businesses will have, even if they don't have multiple offices, they'll certainly either have employees that permanently work on the road, or from home, or occasionally from home, or from out of the office. So the ability to not only, I know there are certain solutions with remote desktop and things like that, but the ability to just do it in a browser really was what was one of the key determinations as to what type of product I was going to go to, and that's why ultimately we went with what I think is one of the only cloud-based solutions that's fully mature right now. Although there are others up and coming, but we went with NetSuite. That was a fully mature solution that offered that feature. In addition, a lot of legacy softwares, they will restrict your ability to edit, change transactions, and we wanted the ability for an administrator, at least, to be able to edit or change, something that, let's say, you imported, 500 transactions improperly. We wanted the ability to reverse that, but we also wanted to be able to know what happened so that we would be compliant with all the regulations that are out there. So a strong audit trail was key. We wanted a modern accounting system, which I think QuickBooks is one of the things that it excels at, is that it's very snappy, it's very modern type of software, very easy to use, very intuitive. The reports, you can drill down from the report to the source transaction. It was a somewhat modern accounting system. We wanted to stay in that type of architecture. We didn't want a software that's been around since 1970 or 1980 or whatever it is and was modified to match the needs of today. I wanted something that was built with the knowledge of what is available in the 21st century, and it was built from the ground up. And with that in mind, I feel like it would serve our purposes better. I talked about the fact that it would be a web-based system and on the operating system, and lastly, we wanted something that was unified, that we didn't have multiple databases. Like I said in an earlier slide, you don't want to have a situation where your website is running on one platform, your ERP is on a different platform, and then you have several other different softwares. You could have Salesforce or whatever your company would have running whatever process it is. We wanted to have it fully integrated so you wouldn't have to worry about syncing data. So now that we've made the transition, I think that in terms of reporting, and that's a key. That actually used to be a key function of mine. It's becoming less and less a key function of mine, at least as far as time goes. It's taking less and less of my time in pulling up reports, because when an employee requests a report from me, and this is true with a cloud-based system only, when they request a report from me, I'm able to customize the report exactly how they want it. Whatever data they need, I can marry it all together, all on one screen, in one simple format, and then I simply give them the link to that report, and in real time, whenever they want, from that point forward, they can pull up that report with whatever data is accurate to the second at whatever point they want it. So if they want their commission report, in QuickBooks I used to pull up commission reports, which was a combination of multiple different spreadsheets, put it all together for each employee at the end of every month, and then email a spreadsheet to each employee. Now each employee has a link to their commission report. They click on the link. It's a shortcut actually within that. So they click on their shortcut and it shows them their data when they want it. At the end of every day, they want to pull up where they're holding for the month in commissions. They have that option. So those are the types of features that we were looking for. I also, true to QuickBooks, exactly the same as QuickBooks, but what was important that we maintain that was the ability to click through to the source transaction. So when you see a number on a report, it's not just a number on a report, but you can click all the way down to the details to see where it got that number from, if you really so chose, just to make sure that you can audit it and see that the number is truly what it's supposed to be. And not only am I able to do these things, but and this does take some technical knowledge, but you want to be in a situation where, with some training and some level of computer savvy, the average user can pull up their own custom reports and save their own reports, and from wherever they are. I would definitely say that, and this was true with Great Plains and some of the other software. One of the key ingredients for us was I like the idea of real-time reporting. Anytime something has to be posted to the general ledger and you're waiting to make sure that it's the accurate data, anytime you hear that, I'm thinking that is old-fashioned, and also it could lead to inaccurate reporting and inaccurate data being sent around the office. And when the truth is there's no reason why we couldn't have live data. And you go to the next slide. Another one of the best practices that you might want to have for instituting an ERP system is you would like the ability to customize your data to allow, and this is actually one of the key things that helped us grow. Besides for the ability to exceed the 30 user limitation, I think we're up to 74 users right now. But besides for that, you also want to be able to say that the software is working for us. We have software that's helping run our business. It's helping manage our data. It's helping managing our accounting and financials. Well, let us tell it what we want to do, and then and then it will act and respond accordingly, as opposed to the opposite, where you find businesses that are making decisions based on what the ability of the software has, what QuickBooks can do. Therefore, we're going to run our business that way, and that's not really the way you want it to be. You want software with very strong customization abilities. And accessibility, we talked about, is a key function for any software. You want it to be available anywhere that you are doing business, including smartphones and home computers, laptops, wherever we are. Everyone is always. We had a snowstorm in one of our offices recently, and business didn't miss a beat because everyone just logged in from wherever they were, and they were able to continue working as they were before. And lastly, and this is something unique to cloud, to a cloud-based solution, and especially if you're a small business, which if you're on QuickBooks you probably are, is the idea of hosting and maintaining your software is unneeded distraction. It doesn't. It's not a core function of your business unless you are a technology company. It's something that is just a necessary evil, and if that is what it is, then you might as well outsource it to a company that's professional and knows how to do it, does it for you. Updates happen on a regular basis on their own, and there's no hosting, there's no servers, there's no maintenance, and there's no fees, and there's no headaches. So I would avoid that, and that's one of the decisions, one of the reasons why we made the decision to go to a cloud-based system. So I guess that would be, so in summary, I would say that, when it comes to replacing the software for your business, I would strongly consider, and we use cloud-based solutions not only for ERP, but we use it for email and for a host of other things, timekeeping and things like that. So I would strongly consider a cloud-based solution because of all the benefits over a premise-based solution.
Great. Thank you, Howie. I appreciate that insight into someone who very recently has gone through all of the fun of finding new systems, which is always a lot of effort. It's great to see that firsthand. Thank you for that. At this point, we're going to take another 1 minute, a brief hiatus here. We've got the second of our 2 CPE polling questions up on your screen. And once again, I invite you, even if you're not here for a CPE credit, feel free to answer this. We'd love to get insight into what folks are thinking about. So we'll leave this open for a minute. I'll also take a moment to, once again, point you towards the questions zone of your GoToWebinar control panel. If you have any questions, now's the time to get them in so that we can put them in front of Paul and Howie and have them answer in the last 10 or 12 minutes that we've got here. So we'll leave this poll open for just another few moments, and then we'll get on to your questions. Okay, I'm going to go ahead and close the poll at this point. And actually, the first thing I'm going to do is show us the results of these polls, because we usually find this very interesting, and the people who are here like to see oftentimes what other people are seeing or thinking about. So the biggest frustration at my company related to our current accounting and financial system is, and Paul, what do you think about this? Too much time spent cleaning and aggregating data for reporting. We know reporting is a big deal. Is that similar to what you guys see in your customer base?
Yeah. I mean, as I mentioned earlier, I mean that's it's we see basically that it's a lot of time spent basically collecting information from different parts of the business and plucking out the various different systems and then trying to merge it together into spreadsheets. And I think we're seeing businesses want to move to real-time data and also spend less time collecting it and more time analyzing it. So yeah, very representative.
And Howie, do any of these ring true? Were these some of your core reasons as well?
Yeah, I'm assuming some of the 64% on cleaning and aggregating data are probably either familiar with VLOOKUPs and pivot tables, or they need to be familiar with it. You use a lot less of it when you have a stronger reporting software that's doing it for you, through a saved report.
Right. And actually, just, I mean, this is even more definitive. The most important elements of an accounting system for me are, and powerful reporting, number one, by almost a 3 times margin. Number 2 is available anytime, anywhere. So I guess that's not terribly surprising, given what we saw in the first set of poll questions. Okay, so we've got a whole boatload of systems here, questions here, pardon me. And let's go ahead and get these going. So first question, is there a cloud-based system that can start out small and lean and grow with your company? Actually, Howie, since you just took a look at probably all the offerings that could fit small growing companies, what did you see out there? Was there anything smaller than a NetSuite, or does NetSuite make sense for a smaller growing company?
So we were unique, and when we went shopping for software, and we told people, we were, I think for that year we were on pace to do $20 million. And the numbers we went through, they said, oh, you must hate QuickBooks because of this, that, and the other thing. And we're like, oh, actually, we like the idea that it's a small type of software. It was very affordable, and it was very easy to use in training and all that other stuff. And when we were looking at NetSuite, and what the first question we asked was, can we dumb this down? Can we turn off half the features that you have? Do we need to buy all this stuff, or is it modular based? We wanted to scale it down, but we wanted the best of both worlds, because we wanted that. When we moved over, we had the same amount of users in NetSuite as we did QuickBooks the day before. So we wanted it to be a smooth transition. We didn't want to have to change the whole company overnight. But then again, we also wanted the ability to never have to change again in a hypothetical world, which means it would need to be scalable to, the sky's the limit. So, well, I mean, to me, I'm not sure if that's the sky's really the limit with NetSuite, but, we wanted something that we wouldn't have to think about transitioning off of at any time in the near future.
And actually, were you able to, not implement the pieces you didn't want to implement, or, turn them on and off, et cetera, to make them fit you properly?
Yeah, we were. It took some restraint because, you know, whenever I see this, I'm like, this is great. Let's just throw this at everybody and let's introduce this new process and this new feature. And, you know, for the most part, we were able to restrain ourselves. The pricing is, as with anything above QuickBooks Enterprise, there's a huge jump that that I'm not aware of any offering out there that closes that gap. There is a significant jump in pricing, but because of the fact that NetSuite is a cloud-based solutions in general are generally sold on a subscription basis, you're not hit up with that right away. You're more paying an annual or monthly fee for using it as you need it for as much as you need it. So you don't need to make that big, gigantic $200,000-$300,000 investment right away. It's more like instead of the $3,000 a year you're paying to maintain your QuickBooks, it could be $10,000 a year or whatever it is.
Yep. Great. Next question for Paul. How do you get comfortable with security around your data in the cloud? Classic question if I've ever heard one.
Yeah. There's a couple of things to think about. I think the first thing, though, is that, you know, you do need to make sure you ask the tough questions of any cloud vendor. You know, it's a fast-growing area. You know, there are a lot of, you know, kind of cloud applications or cloud vendors kind of jumping on the scene. And, you know, just because they have a nice-looking website, it doesn't necessarily mean that they have a highly tenured security team on the back end. So you really need to drill into those questions. And so, you know, there are some things to ask. You know, and the first one is just basic certification, you know, SAS 70 Type 2 certification. Now, there's some level of controls in there around, you know, for AICPA compliance. It's more of a statement of controls and everything, but that's a basic level of certification. But a better level is like PCI DSS compliance. That is a very rigorous security certification. Basically, it's 8 points of inspection, everything from vulnerability testing, Trojans, separation of duties, all those kinds of things. But the third area is it's really about tenure and track record. You know, say some cloud vendors might have only been around for a year or two, right? Others have been around, you know, 5 years, 10 years. So, you know, and also, you know, when you're going through the evaluation process, you know, you should even ask to speak to the team there, right? I mean, ask to speak to the people that run the data center, you know, understand the tenure, understand what security policies they have in place, and really drill into that. Now, what I would say is this, though, is that, you know, you've done right. You know, typically a cloud vendor, a mature cloud vendor, will be able to provide better security than you can typically achieve economically yourself with your own, with a small business. You know, because they have, you know, a lot of IT people, a lot of very technical, you know, security experts devoted to securing the application. Whereas if you look in your own business systems, well, you've probably got a part-time IT guy that, you know, does that on the side, but he's also installing, you know, Office applications and maintaining email server as well. So, you know, a cloud vendor is able to get much bigger economies of scale and pass on some pretty strong security benefits. But as a buyer, you also need to be educated and ask the right questions about the vendor too.
And actually, for the uninitiated, PCI stands for Payment Card Industry Standard, which is what companies who collect credit card information online need to adhere to. And that is a very strict standard, very prescriptive standard as well. So I'll ask this one of how you might have some first-hand experience with this. How are cloud-based systems progressing with respect to banking integration? Do you have banking integration with your platform, and how did that go?
We do, but on a very limited basis, so I can't speak too much in experience with the exception of, I'll tell you, I do import any banking software that allows you to export, you know, the QuickBooks file. I think it's .qi. I'm not sure the exact format, QIF, whatever it is. It comes out of my, I'll log into our credit cards, and our company uses, I don't know, 10 or 15 different credit cards. I log into each statement. I'll export that CSV file, and I import it into NetSuite, and I'm able to reconcile our credit cards with it. To the extent that you're able to do that, it's very strong. I'm not sure what other type of banking integrations other people use, but to that, it works just as well as any other software.
Yeah,
go ahead, Paul. Go ahead.
Oh, yeah, just to kind of key off of Howard's point there. So, at NetSuite we actually have a very large ecosystem of what we call Suite App partners. They basically plug into our platform. So, in terms of like bank reconciliation, we actually work with a company called Nolan Business Solutions. So they basically put in an integrated application that plugs in to NetSuite. So they're basically reconciles all the cash between NetSuite and your bank account. The other area that NetSuite actually support is all the electronic payments aspect as well. So we actually support pretty much all of the major banking formats to pay vendor bills electronically, as well as actually on the incoming payment side of things, incoming credit card payments. Actually working with a lot of the payment processors out there as well, such as CyberSource and Merchant Eve for basically incoming payments and also the fraud detection. So once again, it's an interesting aspect about cloud vendors. If they have a strong ecosystem and partners that plug in, that really helps in terms of add functionality when needed to.
I could actually. You brought up the topic of merchant accounts, which I'm not sure if that was the question was about banking integration and merchant accounts, and that's actually one of the weakest things about QuickBooks. It is a very strong integration, but it's strong because they own the merchant processor that it integrates with, and their fees are exorbitantly high. And one of the beauties of NetSuite was that it enabled us to shop around to just about every merchant processor I looked into was compatible with the integrated credit cards that NetSuite had. So I had choices there with the integration at the same time, and our credit card fees went down by thousands of dollars a month.
And then for my part, since
help pay for the software.
Oh, great. My company is actually on NetSuite as well, and I can tell you we've integrated successfully in terms of automated bill payment, where you initiate a bill in NetSuite and it just gets paid out through both Wells Fargo and Silicon Valley Bank, and that was very easy to set up and use. So it sounds like there's a fairly decent waterfront covered there. I hate to say it because we have a lot of questions in the queue here, but we're out of time and we're trying to be respectful of everyone's time. I will work with Paul and Howie and see if we can't get these other questions answered directly or online, where we might post them online performative, and let Paul and others have a go at them. What I'd love to do first is thank Paul and Howie for their time and insight. Thanks, gentlemen. Great having you on board today, and wonderful information. Greatly appreciate it.
Sure.
So thank you for that. Next up, I'd love to thank NetSuite for helping us make this all possible at no cost, as always, to the attendees today. If you have any questions at all about CPE credit, please send an email to Tanya Walsh. You can see her email there at the bottom of the screen. If you pre-signed up for CPE credits, just hang out 24 hours or so. You'll get your certificate via email. It's that easy. When you log off of this webinar, you will be presented with a survey. We appreciate you just taking a minute and filling it out. We always like to know what we can do better the next time, and would appreciate your feedback greatly. And with that, I'm going to go ahead and let everyone go. 10 o'clock even Pacific Coast time, 1 o'clock Eastern. Thanks everyone for your time and attention today, and we look forward to seeing you at our next event or online at performative.com. Take care all.